Hello everyone, George DeSantis here with the look of the market for the week ending December 23rd, 2016. Before we begin, as I usually do, I want to read the disclaimer. So let's do that. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's begin by looking at the multi-chart of the S&P. This will probably be a shorter version of the look at the market. It's the holiday weekend, but let's take a look. So here's that monthly chart of the S&P 500 that we usually look at. And at the top of the chart, we can see that we are closing pretty close to the high of the month. The parabolic is below the most recent bar, so there's no indication to reverse this uptrend or that this uptrend will be reversed anytime soon. The Kalman filter crossed above the instantaneous trend line way back here and earlier in the year, and it continues to remain above the instantaneous trend line. So this is the indication here that there is an uptrend on this longer term time frame, the monthly chart. So if you're an investor and not a trader, and you have securities or ETFs or whatever that you feel pretty comfortable with in terms of their fundamentals, etc., this is what you want to pay attention to, the monthly chart. Although you don't want to trade off the monthly chart, it gives an indication of what the general market looks like vis-a-vis the long term. Now, in the middle of the chart, MACD continues to trend up. So it's now above the zero line, and that means bulls are in charge. Bulls have taken over, and we can see, as would be reflected also in these, the slow moving average and the fast moving average. Fast moving average is now above the slow moving average. Just another indication the trend is up. And at the bottom of the chart, Alex Elder's force index, it's really a 13 period because this is a monthly chart, so 13-month period. It's continuing to trend up once it broke above this trend line here. So this monthly chart continues to remain bullish. Let's take a look at the weekly chart of the S&P. So here's that weekly chart we usually look at. And the first thing we should notice is the direction of the trend. And since the Kalman filter crossed above the instantaneous trend line here, it remains up above the instantaneous trend line. And this is one indication that the trend is up. It's still up. Also, we have the parabolic, this yellow dot, below the most recent bar, would be last week's bar, of course. And that is an indication that there is no signal here to reverse the direction of this trend. So we do continue to have an uptrend. We do have some dojis at the top here. We had a doji a week ago, and now we have another one here. So there's some uncertainty, or another way to interpret this is, as we'll see particularly on the daily chart, is that the market had this nice run up, and as Larry Williams has often indicated, the market has got to breathe. So the market has to take its breath, and another way of saying that we go into somewhat of a little bit of a trading range until we take the next step up, possibly down, but the next step up, before we go there, we must consolidate this gain. So below here, we find that the percent R, Williams percent R with a 30 period, since it bounced off the 50% line, it continues to remain above 80%. So if we use this, as I do, as a momentum indicator, then the momentum continues to be pretty strong. And another thing is that the ascent of this line, the angle of ascent, is pretty steep. So that bodes well for the future for this bearish scenario, this bullish scenario. I'm sorry, the bullish scenario. Now below here we have RSI 12, which is a very good trend indicator if used on a weekly chart, which is what this is, since it crossed above 40% here back in February of 2016, continues to remain above 40%, although it did come back and regress to the 40% line here, it bounced off it, and now it remains above 60%. MACD is a little bit problematic. For example, last week I pointed out that we made a high, MACD made a high. We made a higher high, and MACD made a lower high. Well, that was at last week. Now notice this week MACD is making a higher high. If this continues, so that MACD continues to make higher highs, then the bearish scenario that we were anticipating becomes null and void. In order for it to be a bearish divergence, MACD must make a lower high. So we'll wait and see how this develops. But as of now, it's looking like a bearish divergence unless we make a new high on MACD as the market continues to make higher highs here. So it could be a bearish divergence, but we'll wait for that confirmation as we continue. So we need to have a little caution as we go forward. Let's take a look at the daily chart. So here's a daily chart of the S&P 500. The first thing we should note is that the Kalman filter is above the instantaneous trend line. So technically the trend is still up. I mentioned when we looked at the weekly chart that it looks as though we were in a trading range. Well, we could see some of that right here, a bit of a trading range. We could even draw a triangle by connecting these lines here, these two highs here, and connecting these two lows. So we do have a bit of a symmetrical triangle. That's one reason why I would lean toward the possibility of us breaking out to the upside pretty soon again. But this is really a bit of a trading range after this run-up, as I mentioned on the weekly chart. The Bollinger Bands are now showing us that the S&P on the daily chart is in a squeeze, and it can be resolved in any direction. The squeeze doesn't tell us anything about the direction. It simply says that we can expect somewhat of a dramatic move as we had here to the downside and as we had here to the upside. So we wait to see which direction we're going to go, and I am betting that we're going to go up from here, and even if we do get a bit more of a pullback, that it won't be significant. So I'm bullish on this market. Now, the middle of the chart, we see Jerry Appel's sum of the rate of change indicator, which is above the 4% line, indicating that we are still on a buy signal here for the S&P 500. MACD, although we had a bit of a divergence here with developing, it wasn't quite a classic divergence because we never got the bears pulling the bulls below the zero line, breaking the back of the bulls, as Alex would put it. So it is a bit of a type of divergence, but not the most significant type. Now we have MACD looking to go, and it is below the zero line slightly, minus 0.85. So we have to exercise a little caution here. On the bottom of the chart, we have percent R still above 80%, indicating that momentum is still pretty strong. So the big question is, does this squeeze resolve itself to the upside or the downside? There's a chance it could go somewhat lower, but I'm betting that eventually, even if it goes lower for a short while, eventually we turn up again and we make higher highs from here. So let's take a look at something else. Now we turn to the weekly chart of the NASDAQ composite, and this is an entirely different picture. What we have here, first of all, is the Kalman filter remaining above the instantaneous trend line, indicating to us that the trend is still up, this trend that we began all the way back here, back in February, March. So the trend is still up. However, as we saw on the S&P, we do have some dojis occurring for the last 2 weeks. We closed a little higher last week, this past week, but not by much. Now, the next thing we all look at is that the parabolic is still telling us that the trend is up and there's no signal to reverse the trend based on the weekly chart. We do have an ABCD triangle that we drew here last time, and we claim that we should get the target of 56.54. That's what we calculated, and that's still to be determined. But we did break above the top of the triangle, and that's where we are now. We have closed at 54. What is it? 54.62 and a fraction. So we do have this bullish scenario here, symmetrical triangle, breaking out of the triangle, and parabolic below the most recent bar. Now we turn to what is a possible bearish scenario. And as we made a high here, MACD made a high. MACD made a high. As we pull back, MACD went below the zero line. Again, let's quote Alec, as he would say, breaking the back of the bulls, because it pulled them down below the zero line. Now we're making even higher highs, and MACD is making a lower high. But similar to the S&P, last week we went up a little bit on the MACD, but we have a long way to go to beat this high. So this bearish scenario is still a possibility. We have to keep an eye on these things, and especially when it occurs, when the bearish divergence occurs on a weekly chart. So again, caution. But I still maintain that this market remains bullish, both on the S&P and the weekly chart, and the NASDAQ on the weekly chart. So let's take a look at something else. Here's a daily chart of the NASDAQ composite. And what we see here again is that the Kalman filter is above the instantaneous trend line. Trend is up. Parabolic is below the most recent bar. No indication to reverse the uptrend. In the middle of the chart, we have Jerry Appel's indicator saying we're still on a buy signal because it's still above 4%. If we go to the MACD, though, we can see that there is that bearish divergence. As we saw developing on the weekly chart, we do have it here on the daily chart. More caution. We broke the back of the bulls here as we made this low, and now the bulls can hardly match this high on MACD. So we got to pay attention here and be careful about holding positions that may show some weakness. Also at the bottom of the chart, we have elder force trending down. So while the monthly chart is very bullish, and that's a long-term chart, the weekly chart remains in an uptrend and pretty bullish, and looks as though we were going to have a bearish divergence, and we can still have that on the weekly chart of the S&P and the weekly chart of the NASDAQ. Here on the daily chart, we have the clear divergence of MACD, and that is going to indicate that perhaps we will pull back with a retracement to the instantaneous trend line, at least somewhere closer to the instantaneous trend line, as we did here. Okay, so let's take a look at something else. We have very little time left on this, so one quick look at the impulse indicator, the weekly chart. We're green, we're allowed to buy on the S&P, that is. MACD shows us that possible divergence, but at the bottom of the chart, Williams percent hour is still in bullish territory. And on the daily chart, if we can take a look at it quickly, we do have blue bars, and we can see that triangle here at the bottom of the chart. At the top of the chart here, it's a continuation pattern. Have a wonderful day tomorrow. Merry Christmas. And we'll try to do this again next week, God willing.